Hello, good evening, everyone, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia, and today it is the 3rd of February, 2023. As usual, a Friday, and time passes very fast, and it is, within the blink of an eye, we are into February fast month, okay? So if you guys can hear me loud and clear, okay, please say a hi to me in the comments or in the chat box. This streaming, okay, is broadcasted to both Facebook and also on YouTube as well. So I'm very friendly, so please give me a like, share, or comment, and also say a hi to me, okay? So last week, I was sick, okay? Yeah, I have a very bad cough. In fact, I still haven't 100% recover yet. I'm still having my cough. So in between, okay, I might be coughing. So please pardon me if I cough, okay? I might just hold on to my mic, okay, and just cough, okay? All right, so okay, so talking about this, illness, this sickness, I think it has been, as far as I can remember, right, ever since my girl was born, okay, she is now about 5 years old. I didn't have such, bad cold or flu before. So, I have a sore throat first, after that I have a runny nose, a blocked nose, okay, and then a cough coming up, okay. And of course, all this, I didn't get COVID. Okay, it's not COVID. Okay, by the way, I think I'm still one of the rare one that did not get COVID. I'm still didn't get COVID before. Yeah. So, but anyway, I tested ART. It's not COVID. So it's just a very bad cold or flu. So normally when I have flu or cold, I just take the Telfast D, or Zyrtex D or Clarinase D. It should work. Okay, but this time around, I started to take all the medicine, Zyrtex, Telfast, everything I took, right? It cannot recover. Okay, at the end of the day, I no choice. I have to go to see a doctor, and in the end, the doctor dispense antibiotic and such lah. So stronger medicine and such. Okay. Anyway, let me take a look at the comments right now. Okay. Say a hi to me in the comments. Okay. I think we are still pretty early, as in just starting only 11:30. Okay. So hi Edmund, hello Christopher, hi Dave, Gabriel, and your Lam, Daniel, Nelson, William, hey Maybit, okay, Kenny, Pei Wen. Alex Lee, hey, hi Alex, okay, SC Tong, okay, Chris, Roger, Michelle, David Gan, Jasper, Wei Lun, okay, Wei Lun is also a pro trader now, Michelle, Henry, Pochu, Eddie, okay, Aso, okay, Mark, CJ, hey, Ken Hawk, Christina, okay, so I think CJ, yeah, back off, yeah. All right, so yes, so I am still feeling okay. So in between, just a little bit of cough. Okay, okay. So let's get kickstart this session. Okay, so yeah, today the market is still pretty strong. Even though today there are some fundamental news that came up. The unemployment rate, the non-farm payroll, and of course, I think on actually Thursday morning. Okay, there is this the rate hike and such. I'll go through with that very soon. Okay, hello Denise, Desmond, okay, Yan Guang, okay, Jimmy, SG Boy Wonder. So so if you just join me, okay, I really ask that you give me a like, share, or comment. Okay, if you're on YouTube, please subscribe to our channel. Just engage with me. It just tell Facebook and YouTube algo, okay, that you have interacted with me. If you like my content, and in the future, okay, they'll keep showing you our content, MarketWise Asia content. Because if you don't interact with me, okay, next time they'll start showing you less and lesser, and eventually they will not show you at all. So please give me a like, share, or comment. Liking is free. And of course, if you have been watching my Facebook Live, you think that this channel, this streaming is very useful, okay, just share it out with your friend. If you are too shy to share on social media, right? Okay, just tell your friends, that hey, there's this guy there, Alex, okay, who share good stuff on trading. He's just really, sincere sharing and such. Okay, just tell them that there's this guy Alex from MarketWise Asia that's sharing. All right, so let me go through this. Okay, let's get started over here. So as usual, a disclaimer first. Whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. Okay, Alex will be wrong, so please do your own due diligence. This is not a financial advice. All right, so before I kickstart this session, okay, as usual, right, I think most of you should be already on our Telegram channel. Okay, all right. If you are new here, okay, subscribe to our Telegram channel and also our YouTube channel. So our YouTube channel has surpassed 2K, okay, and it's going to be 2.1K, okay. It is still can be better, okay. I hope you guys can just subscribe to our channel, okay. I'll post the link in the comments and also in the chat box over here. All right. So yes, I posted that already. So give me a like, share, comment, subscribe to Telegram channel and YouTube channel. Twitter is something that I think you need to follow me, okay? Okay, later you know why. Because I share a lot of things on Twitter nowadays, okay? So Twitter, all right, if you do not have a Twitter account, okay, I think it is time to get, because Elon Musk has taken over Twitter, and nowadays I also posted quite a lot of things on Twitter as well. I'll post the link in the comments as well. All right, so let's kickstart this session, okay? So 9 minutes into 11:30, now it's 11:37. Of course, you know, by now, okay, by now you should know that on Thursday morning, that's Wednesday midnight lah. Thursday morning, okay, at 3 a.m., okay, nothing special. This is expected, okay. The Federal Reserve gave a 0.25% hike, okay. Hey, May bit, okay. You say that Elon Musk banned my Twitter account, then just open another account lah, can not? Open another account using another email. All right, so yeah, so this is 0.225% hike over here. So let's go through that, okay. This is nothing new. This is from this CME Fed Watch 2 over here. So I think by now, okay, the Fed, okay, has already given you a very clear plan on, you know, how much they plan to hike for the year, okay. It is now the market to decide whether they think that the Fed will start to pivot and such. So the terminal rate is about 5.5% to 5.25%, that kind of range, okay. So the next FOMC meeting are still pretty far away. So that's 47 days ahead. So that's on the 22nd of March. I hope that on the screen this is pretty clear to you, right? So on the of course right now 0.25%, the current rate right now it is 4.5 to 4.75%, okay. Let's use the 4.75%. All right, okay, 4.75% over here. Okay, so in the March 22nd of March, that's 47 days. Is it for 47 days? Yeah, 47 days. Okay, next, okay. There's a almost like 98% chance that it will hike another 0.25% to 5%. Okay, this is pretty straightforward. If you go to, okay, all right, so there's a 44% that you stay at 5%. Okay, another about 55%, those are half, about 50%, okay, that you hike to 5.25%. Okay, right, 5.25%. That's like the terminal rate for 2023 already. Then until June, okay, you can see that, okay, it is pretty stagnant. So it is still 5.25%, about 50% chance. All right, and until in July, all these, I think, you know, during the Market Insights Virtual Summit, I think Jay also talked on this before, okay? So it's nothing new, all right? For those who are new over here, okay, I can post the link in the chat later. So it's also about 45%, okay? That is stay at about 5 to 5.25%. It's only until the third quarter or the last quarter, then the market think that, you know, the Fed might start to reduce the interest rate, okay? So 20th September, yeah, okay, then possibly that kind of starting to reduce the interest rate. So at this point in time, okay, are you guys clear on this rate hike? If you are clear on this rate hike thing, okay, from this CME tool, just type R, rate hike R, just type R, right? Darius say Twitter need phone number. I don't know, like, seriously, because, you know, I created my Twitter account I think more than 10 years ago. So I don't know whether now need phone number or not. I mean, that if need phone number, I think it's okay to give, right? Not a big issue, right? Okay. So yeah, let me remove this. So thank you guys for the comments over here. So I mean, just for those who are just new over here, now that I have about 200 people, okay, on the stream, both on YouTube and also on Facebook combined. Just give me a like, share, or comment. Okay, first of all, the algo, you know that you engage with me. Next time, will show you more of MarketWise Asia content on your feed. Okay, if you don't do that, next time they won't show you. Start lesser and lesser already. Okay, and of course, do like, share, and comments, and let people know that there's this guy Alex giving good information on the on Facebook and YouTube, teaching people how to trade better. Okay, all right. So with that, I think you are clear on the rate high. So okay, this is pretty clear. Okay, so the market, it is 5.25 about there for this year 2023. Okay, next come just now there was this fundamental news, okay, fundamental economic news over here, all right? So this is the non-farm payroll over here, all right? So expected, by the way, non-farm payroll, okay, I think just now there was some people asking in the Telegram channel, okay, I just need to subscribe to our Telegram channel over here. All right, I say that, this MarketWise Asia, there's some of the time-sensitive news, okay, like breaking news, non-farm payroll, okay, I'll post in the Telegram channel, okay, price movers and such, okay. Basically, non-farm payroll is just number of job added, okay, excluding, okay, those farming jobs lah, okay. All right, so expectation, it is about 200K, 189K lah, but it is more than double, okay. There are more than a lot of double, okay. There's 500K jobs added into the economy, okay. All right, I think that will bring the, I don't know, the recession narrative, okay, I think at least shut them down for at least for a few weeks, I don't know, okay, because ever since, last year and this year, the yield curve inverted, the market has been harping about this recession, recession and such, okay. So the non-farm payroll, at least for January, is telling you that the job market, the labor market is still pretty strong. It is extremely strong, okay. All right, so yeah. And upon hearing this news, right, the futures market actually dived down, okay, had a deep dive, okay, went very red. But right now, the market actually rebounded pretty fast. The market is pretty strong, all right. So, and of course, US unemployment rate, after that, the data came out, all right, and it falls to 3.4%, and it is the lowest level since 1969, okay. And low unemployment rate, okay, it is interlinked now, okay. High number of jobs, okay. Okay, of course, unemployment rate will definitely go lower, right? Correct. This is a logical thinking, right? I think just now there was this ISM number, so also I think it's also pretty good, okay. This ISM number, I think about factory thing kind of thing, okay. All right. So before this economic news, I didn't have this, okay. I wanted to talk about this recession thing. So it linked back to the recession, okay. Of course, I mentioned that since last year and this year, people have been harping about this recession in 2023, and they talk about, wow, all the big tech like Amazon, Google, or what else, they've been laying off people. Okay, so the layoff, let me try to share with you on the chart right now. So this is the layoff Twitter and all this laying off, right? So you guys can see this chart right now, right? Okay, so big tech is in its big layoff era. Sorry, all right. Through Apple's hope, though Apple is holding strong. So you can see that on the news, you can see that they lay off 5-figure amount of people, 10,000, 15,000, that kind of high 4-figure. But you need to put things into context. Okay, this data is provided by chart R over here. You can see that actually at the peak in 2022, right? Meta, Facebook actually have about 87K. Okay, Alphabet, that's Google, 2022, 187K. All right, Microsoft, it is 221K. Okay, and Apple, 164K. Okay, that's a lot of people, and just shedding 10K to put things in perspective is just a little small dip only. And you need to realize that layoff, the numbers here, layoff 11K, Alphabet 12K, Microsoft 10K, Apple nil. Okay, so you need to understand that it is during this pandemic 2021 and year 2022. Okay, the big tech actually overbloated themselves. Okay, they hired too many people, and of course, I think right now after pandemic, it's kind of over. Maybe, I don't know, maybe they realize that it is actually they don't need so many people. I can see on TikTok, some of these is it Google Masu or what massage therapists? I don't know what lah. Okay, what shit is that lah? Okay, they are getting laid off lah. All right, so yeah, so they over bloated in the first place. So the number is actually not that bad. All right. And then, okay, the net tech employment, people say, oh, wow, tech is very big. It's very big. Okay, yes, it is big in terms of people's life, but in terms of employment percentage-wise, right, it is just 7.9% of the whole total US workforce. Okay, so I got this data from here, zipia.com. I don't know how accurate it is, but from this, I also heard from other sources. Okay, I think I read somewhere, but I also forgotten where is it. Okay, the whole tech, okay, employment, okay, it is not a lot. Okay, it is not. You can go through this link over here. The net tech employment account for just about less than 10% of the total US workforce over here. I'll post the link in the comment over here. Yes, Tai Chi, yes, they have been overemployed in the first place. Yeah, right. Okay, that's why I think so also. Okay, and so all in all, so what is the meaning of this? Okay, in terms of job employment, okay, the labor market, it is still pretty strong. If the labor market is still pretty strong, okay, people have the income, and if people have the income, people are able to spend on goods, and services. And if the companies, okay, continue to provide these goods and services, have people patronize them, okay, the revenue at least to stay constant, etc. Okay, so all in all, I think the labor market is still pretty good. Okay, but okay, I think there's a conflict which I mentioned before. So let's relook into this. Okay, let's relook into this. Okay, so this U inversion. All right, so people have been saying, okay, the U curve has inverted, which means that, okay, the 10-year yield is giving less interest, okay, giving less yield than the short-term month current, as in the short-term month yield, okay? So which means that the longer yield is giving less interest than the short-term month yield, okay? Okay, so all in all, the common ones that people are looking for this yield curve inversion is actually the 10-year minus 3 months or 10 years minus 2 years, okay? All right, so let's go through one by one. So I think by now, for those who are active in the market, okay, you should know that, U curve and inverter. For those who don't know, who are new to this U curve thingy, that basically they say that the U curve inversion, okay, is a very good leading indicator that, the market might have probability, okay, that could have been a recession in the coming months ahead. So this is a leading indicator. So we go to this 10 years minus 3 months over here. Let's go to this link over here. So this is the 10 years minus 3 month treasury. Yeah. Okay, I'll post the link in the comments. You should be able to see it. It's from the federal side. So this stlouisfed.org. Okay. So if you go to here, this side, okay, you go to the max. Okay, if you go to if you go to 10 minus 3 or 10 years minus 2 months, it's almost the same. So I'm going to just use the 10 years minus 3 months. Okay. It seems to be pretty popular. I'll post a link in the comments also. So let's go back to these yield over here. I go to the max over here. So you can see that over here, there's this shaded area over here, right? Shaded area. These are the recession period. And when they talk about this, yield spread, okay, 10 years minus 3 months, okay, spread, the yield spread, right? All right. This is inverted, means that it dropped below zero, drop below zero, and drop below zero over here. I think most of you should know, so I'll just go through very quickly over here. So just based on this chart alone, right, of course, they can go back to 1980 something, 1960 something, but from here, it just show until 1980, 82, okay? So out of this 1, 2, 3, 4 recession-wise, okay, at first glance, okay, what pattern can you infer from this 10 years minus 3 months U curve? As in the spread, sorry, the 10 years minus 3 months spread, the 10 years minus 3 months spread. Any answers or not? Just give me a quick one, just on this pattern. Anything they can see over here, okay? All right, of course, it is true based on the previous past recession. Once the U curve inverted, okay, all right, after a period of time, okay, the recession come, inverted after a period of time, the recession come, inverted after a period of time, the recession come, right? After inverted period of time, the recession just comes. Okay, but what I see, okay, is that you see, can see over here that the spread that's in the inverted, it actually need to go below zero, all right, and then rebounded back above zero, okay, and then subsequently there's the recession. Again, this is also right, deep dive way below zero, inverted, okay, back to normal again, and then the recession come. All right, of course, there's a lag time, all right, so which means that way below zero, inverted, then go back to normal again, all right, then the recession come. And this is the 2020 COVID, right? Once again, inversion, back to normal. After that, then it comes again. So right now, my view is that right now, okay, it is still deeply inverted. Okay, it's still deeply inverted. So if you go to this U curve over here, and go to the link over here, let's go to the naked chart. Okay. Okay, so this is the, where is it? Aha. My trading view is a bit laggy, okay? So give it some time to load. I don't know why today so laggy. Okay, so let me try to remove certain things over here. Watch two, okay. Stop, remove this. Okay, so go to the weekly time frame. All right. BL, yeah, I don't know whether your setting it is what is your settings? What's the settings? Okay, so image is very blurred. Maybe you can try the resolution. Well, I think by default, okay, this YouTube and also on the Facebook, the resolution is 720. Okay, all right, high definition, not the highest, but the standard definition. So by right, you should be able to see. So it is still deeply inverted. So it doesn't have a inversion right now so far lah. So okay, all right. Pei Wen say your star come out. So later I will share with you more. All right. So so again, what I want to share with you is that even after that, it really back to normal. Okay, non-inversion, right? There's still some lag time. There's still some lag time over here. Okay, it can be if you go back to this okay, from the inversion June 1989 until recession really comes is July 1990 leh. 89 to 90, there's still many months. I think about 8 to 9 months. No, about 1 year, okay, and then from here to here, it is also about a few months, less than a year. So there's still some lag time over here, which I mentioned before already. Okay, I mentioned before. So if you go to from here to here, the New York Fed, okay, so let's go to this, the probability of a recession over here. Okay, so this is the latest one, updated on the 11th of January 2023 over here. So previously it was like, I think probability is like 10%, 20%, or then 30%. Now it shot up to about 47%. So, okay, so 47% probability is really high if you compare to the previous one. Okay, all this that shot up to very high. There's a like recession. It is in place. Okay, recession is in place. The shaded area is the recession. All right, don't talk about this 1981. This is about very ridiculous one. So just about recent in recent years until 1990, I think that's more than enough. Okay, 30 years, 40 years, that kind of data over here. All right, so you can see that 47%, which means that okay, this is 12 months ahead. Okay, 12 months ahead. So which means that there's a probability, okay, that okay, there's a recession at least maybe about third quarter or fourth quarter. Okay, third quarter, okay, or fourth quarter. So there's still quite some lag time ahead. So meanwhile, of course, if you talk to other people, see other guru online, some are very bearish. Some are on this investing or trading based on this macro data. They say that no recession, as in no bear market has ended before the recession, ended. That kind of thing, right? I'm not sure whether how many of you heard that. A lot of fundamental macro sheet lah. Okay, I'm not saying that they are wrong. Okay, just that from now until the recession come, there's still a lag time. Okay, could be 6 months, 9 months, 12 months, or even 2 years. So you don't know what's going to happen. So are you going to just sit on the sideline and do nothing? Okay. So at this point in time, okay, from what I know, last year about December, there are still a few guru. Okay, I don't know name them. All right, so it is okay. They are fine to have their own opinion. They say, oh no, the bear market it is not over yet. The bear market is not over yet. The bear market is not over yet. And again, some people give you all kind of data lah. So yeah, but actually until last year, right, near November, December, based on technicals, okay, it is already starting to show that the price action is actually pretty strong. The internal breadth, is in the market internals, the breadth is actually pretty strong. Okay, in fact, I started to get really bullish. Okay, at somewhere near the end of December. Okay, and this month, okay, for the month of January, okay, I think the market has been really generous already. Okay, my performance for just about January, I think I'm up about 10% already. So this is really good month. Okay, all right. If you have been staying bearish, okay, I'm just going to ask you when are you going to take action? Okay, all right. So what is your preferred plan? So listening to all this macro fundamental news data is sounds good lah, but what action can you take? Okay, is it going to give you more fear? Okay, or what? Or don't that take action at all? All right, so this is something for you to ponder. I'm not saying that macro fundamental data is not important. I'm just saying that how are you going to take action and to be actionable and become a P&L in your trading profit, be it in losses or profit. Okay, how is it going to make it an actual profit for you in your trading account? Okay, so far, I mean, within my past 10 to 11 years of trading, okay, all the fundamental news, I cannot make money from all this. Make me sound smart lah, but I can't make money lah. All right. So enough of this. Okay. So let's go to the market right now. How many of you agree with me? Okay. If you agree with me, just type yes in the comments. If you don't agree with me, what I mentioned about the fundamental data, just type no. It is totally fine. It's just totally fine. Okay. It's totally fine. So suddenly very quiet all the while I've been talking. Okay. If you agree with me, just type yes. If you don't agree, type no. It is totally fine. Okay. I'm not going to pinpoint you. Okay, I'm just going to give you my sharing now, right? Let me see the thing. Again, I think 30 minutes, I think we still have some time. Okay, let me just go through with you. Okay, I'm not sure about you. I think I mentioned, okay, let me take a look at the comment first. Sure or not? Those no, don't dare to say it is perfectly fine. Okay, you say no. Okay, yeah, seriously, it is fine. Okay, it is fine. All right, so I don't know about you. So when I were a newbie trader, okay, I think I started trading in 2011. So this is my 12 years trading the market. When I was a newbie, I know shit. Okay, I know shit. Okay, I know nothing. Okay, so I like to hear guru to say or somebody that I respect, okay, what is their opinion of the market? Because I at that point in time when I was still very new, I perceived them that they have so much experience in the market, they should know something a lot more than me. All right. So I listened to them and such lah. But as the years goes by, then I realized that hey, actually they got it wrong. Okay. So subsequently I don't really listen to them. Okay. And at the end of the day, nobody knows what's going to happen in the market. And I especially know that because if you are new and you know shit, okay, you tend to put a lot of weight on what that guru say. Correct or not? Okay, if the guru say some or once he got it correct, okay, then they say they put a lot of weight. Oh, last time he got it correct. 10 years ago he got it correct. Okay, or Michael Burry, okay, during the subprime crisis, okay, he got it correct. Then give a lot of weight on this guru or this market analyst. They say, oh, bearish. I'm bear, market, sell. Like what Michael Burry said, like sell. I'm not sure about you. You know the news or not, okay? Michael Burry said on Twitter, say sell. After that, he deleted his account. The market just went up, okay? All right. So it put a lot of weight in the market. So if you keep angering on their kind of views, right, then you don't dare to take action. Okay, you don't dare to action. You don't dare to take action. Okay, at the end of the day, whether they go long or turn short, you also don't know. They just keep harping on the fact that if they say short, I cannot go long the market. I'm still bearish. You keep anchoring on them. You get what I'm trying to say or not? So you don't dare to take action at all. All right, you don't dare to take action at all. So at the end of the day, I hope that by listening to my Facebook Live, okay, form your own opinion. Don't need to listen to me also, okay? Have your own judgment when the time is right, okay? As you build up your experience, okay, learn to have your own judgment, okay? At the end of the day, I also listen to my own judgment, okay? I listen to different gurus, but I form my own opinion and my own judgment, okay? Ken? Right, Ken, So let's go to the market right now. Let's go to the market right now. The market is really strong. Okay, crypto is a leading indicator. Okay, so it's positive already. So let me go through the S&P 500. Okay, let's go to the S&P 500 over here. This is the S&P 500 futures. Okay, ES. So let's go to the weekly time frame first. Okay, all right. For those who are new to me, you should know that above the cloud, uptrend, below the cloud is downtrend. So we are objectively, if you're talking about weekly time frame, we are still not out of the wood, not confirmed uptrend yet, but underneath the surface on the daily time frame, things are looking pretty good. Okay, all right. So we are in the cloud right now. If you go down to the daily time frame, all right. Okay, go down to the daily time frame. All right. So this time around, we are first month above the central pivot range. This is the second month we are above the central pivot range. Okay. All right. Prior to that, okay, since the bear market started in early last year, January 2022, there was not one time that it can be above the central pivot range, which is this green dotted 3 lines over here, right? Not once it is above the central pivot range CPR for 2 consecutive months. Okay, so this is last month was the first month above, closing above the CPR. This month, second month, let's see where it can close. All right, based on history, I think I also say a lot of times, okay, when price is above the central pivot range for 2 consecutive months, okay, like here, above, okay, it went for uptrend. I can show a lot of examples over here, but I don't want to show, okay, waste my time because I have still a lot of things to share. But yes, just assume that, okay, above the CPR for 2 consecutive months is a good sign. Okay, it's a good sign. All right, and then yearly pivot. If you aim the yearly pivot, also right, we are almost there. Okay, above the hitting right smack at the resistance at the upper range of the central pivot range, hitting resistance over here. Okay, so this one is okay. All right, but prior to that, I think I shared. I think last week, 2 weeks before. Okay, or also on my Twitter. Okay, on my Twitter, I mentioned that the RSP. All right, this is the S&P 500 yearly pivot. Okay, it is above the black dotted line here. Okay, I remove here. Okay, I remove this. Okay, can you see this is yearly pivot? This is a yearly pivot. Above the yearly pivot, it is strong. Okay, Nasdaq 100 equal weight, it is also above the yearly pivot. Okay, all right. Mid cap also above the yearly pivot. All right. Small cap, it is also above the yearly pivot. Russell 1000 equal weight, which is a subset of S&P 500 plus another 500 stocks, total 1000 stocks, okay, it is also above the yearly pivot. If you add in the 200 days moving average, okay, these are all above the 200 days moving average. So I say that 2 weeks ago, okay, or the start of the year, okay, I am bullish already. Okay, I'm not sure how many of you actually listen to what the technicals are telling you. Okay, and position yourself in the market, looking for the signals to go long. All right. So as I mentioned, okay, uh, as in my previous Facebook Live, right, when a lot of people are still pretty bearish in late December, somewhere around here, which a lot of people are expecting another leg down. Okay, as I mentioned, the technicals is actually showing not the market breadth is actually showing pretty good sign. Okay, and there were a lot of individual stocks set up in the market that is bullish. Okay, I in fact go long somewhere around late December and early January. So along the way, there was some trade I take profit. Okay, okay. Again, these are just the market sentiment, but right now the market it is overextended already. Okay, so that's the reason why you need to subscribe or follow on my Twitter account over here. Sorry, so this is Twitter account. It is here. Okay, Twitter account. It is here. Darius, now it's a daily uptrend, but looks overextended for long-term investors. Should we wait or just go in when uptrend? Okay. Okay. It depends on your time frame. All right. I think right now it's overextended. If you are doing swing trading, okay, position trading, I think you can afford, maybe to just wait for the pullback a little bit. Okay, but the pullback might not come. That's the dilemma. That's the thing. Okay. And then when the start of a nascent, there's a new uptrend, it is so strong that it is very hard to catch the pullback. If you're a long-term investor, then okay, holding for a few years, 2 to 3 years, that kind, I think okay, doesn't make much difference. But of course, you can try to time. But overall, I think long-term, I think the timing it is not so important because you have time in the market. Okay, you can afford to ride through it. But for swing trading, holding for a few days to 2 or 3 weeks, that kind, your timing must be very precise. Okay, all right. And talking about that, okay, so because my Twitter over here, I actually mentioned, okay, all right. Can you see over here, February 2nd? Today it is right now, of course, it's 3rd. Okay, in now Saturday is the 4th already, right? So I mentioned right, SPY hitting the flat Ichimoku cloud resistance. Okay, this is a 1 week time frame which tends to get resisted on the first test. Okay, all right. So potentially it could come down. Of course, it doesn't mean that it will crash. Okay, it might stall a little bit, pause a little bit. Okay, get resisted over there. Okay, so I mentioned that yesterday. All right, and then what else did I mention? I mentioned that, okay, this VVIX could be at a peak. Okay, it should coming down. All right, don't get overly bullish. All right, so this is yeah, this one yesterday, okay, February 2nd. Okay, BTC turning red, crypto has been a leading care of equities market so far. VVIX over VIX ratio is very right now. Be careful of the market. Exit your longs when you can, not when you need to. Okay, all right. So of course, today the market dropped a little bit. Okay, and some of the individual stocks, okay, drop some more. Okay, all right. So this is why I think you should follow me on Twitter because I share a lot of current information out there. All right. So yeah, this kind of information I don't usually share on Telegram, but Telegram is also important to let you know what's overall happening in the market, the price mover, latest fundamental news, etc. over here. Okay. So let me see over here. What else? Yeah. So I mentioned that yesterday already. So right now, let me go through the S&P 500. Where is the potential support? But personally, I really hope that the market can come down a bit more. Okay, can come down a bit more. All right, so let me add in the usual indicator over here. Okay. All right, so green is monthly CPR. The black is the yearly CPR. I hope don't confuse you guys. All right, so okay, so you can see that over here, S&P 500. Okay, I am hoping that price can come down and test the central pivot range over here. Okay. Of course, if you put in the naked chart, over here, all right, this will be a very kind of standard support and resistance area, because this was the prior resistance area, correct or not? And then if price will come down and look at but this level 4070, it is too obvious already. Every Tom, Dick, and Harry can see that. Okay, every Tom, Dick, and Harry can see that. So I am actually looking at price, if possible. Okay, I don't know whether price will just continue to shoot up like that. I don't know. If really price does come down, I really hope that you will test the central pivot range. Okay, right? Do a deeper pullback. Okay, flush out all the weak longs first. That is at about 4,000 level. Okay, that's about 4,000 level. Okay, 4,000 level. So if you understand what I'm trying to say, just type 4,000 in the comments. Okay, drink a bit of water first. Okay, if you're looking at the Nasdaq, all right. If you put in the naked chart, okay, the very obvious support and resistance area, right? Okay, 不用看的，读过 TA 的人都懂，看过 TA 的人都懂，就是 somewhere around here. Okay, this was a prior resistance. Okay, breakout, now turn support. Okay, so if you add in here, is it here? Okay, so this was the prior Nasdaq futures. Okay, this is the prior resistance. Okay, everybody is looking at that area. So if price really does come down, okay, people looking at this 12,210, 12210. But I think again, this is too obvious. Every Tom, Dick, and Harry can see it. So I don't think market is so simple. All right. So I think it might do some, if price really to come down, I don't know. Okay. If price to come down, we bust a bit and then come down further. Okay. Which is where the central pivot range will come into play. Okay. All right. So if you add in this, okay. So it's somewhere around here. All right. Go down a little bit further. All right. Come down a little bit further. All right. So which is, if we are at the central pivot range, it is at about 11,700. Okay, somewhere around there, 11,700 for the Nasdaq NQ futures, somewhere around there, or maybe at the top of the central pivot range, at the top, which is at about 11,940. Okay, all right. So, but just be focused on the central pivot range, somewhere around there, if possible. Okay, I don't know how, but I'm waiting for the market to give me the signal right now. Okay, and of course, you know, the star signal, right? Okay, so this was the prior star signal over here. The last time, okay, the star signal was a proprietary signal. Okay, add in some parameter. Don't ask me whether how to get this star signal. This actual star here, it is not the actual indicator. I can move around one. Okay, this star, this is just an icon. So I just put it here. All right, the previous time, okay, it gave me the star signal on the Nasdaq is actually on March 2022. Okay, star signal, and then it came down to here. So right now, okay, for Nasdaq futures, it is also giving me a star signal. All right, so potentially, if you go long now, which you could, okay, but I feel a bit 头脑派啦, okay, TMP because the risk versus the reward, it is not there, because market is already up so much already. Okay, all right, late December you don't want to go long, early January you don't want to go long, mid January you don't want to go long, okay, late January you don't want to go long, and then until now then you want to go long. Okay, something is not very right lah. Okay, of course the market can do like that lah. Okay, then so be it lah. The market can do, you know, like that and chop them again, but so be it lah. But I right now I feel that the risk reward, it is not so good right now. So the market is really up from the low to the top. It is up about 18%, up about 20% already. Okay, so the star signal for Nasdaq, it is coming out. So this is one clue. Okay, that it can hit a interim top. All right, so S&P I didn't put, but the SPY, which is the equivalent of the S&P 500 ETF SPY, okay, there is also a star signal over here, not the exact top. Okay, the previous one was somewhere around here. It is late October 2022, okay, right, and then try to roll over down, okay, and then in last year, I think this was in August, okay, not the exact top also, but after that, up a little bit and then come down a little bit, okay. So right now, the S&P, once again, is also showing a star signal somewhere around here, okay. Now it really exceeded. So there's a potential chance that, okay, that it can still roll over and come down. So which means that the S&P and the NASDAQ are in a way both showing the star signal that it is also kind of overbought. Understand what I'm trying to say? Can, all right. And the other one, the market internals that I'm looking at is actually the VVIX over VIX ratio over here. It is also showing a star signal over here. Okay, all right. So basically, for those who don't know, VVIX over VIX ratio, it is a market internal. So normally, you know, it moves in tandem with the market. And how I see using this is to see the divergence. Is if the market is going up, but the VVIX ratio is coming down, then you need to be careful. Or, you know, if the market is coming down, but the VVIX ratio is going up, then the market is actually not so bad. That kind of thing, okay? Now, no time to explain, all right? But, all right, you can just treat it as if VVIX ratio is come down, the market will come down. If the VVIX ratio go up, okay, the market might go up, okay, that kind of thing. So previously, the VVIX ratio, okay, here, star signal, came down, star signal came down, okay, and right now, the VVIX ratio, it is also showing a star signal right now, okay? So there's a few clues that is telling me that the market is actually overbought right now. Okay, the market is actually overbought right now, which I mentioned in my Twitter account over here, which is this one, okay, which is the VVIX over here. I mentioned that, you know, potentially it could come down. So this one I posted on the 1st of February, okay, 1st of February, right? It is still in play, right? So you guys, I think you need to be careful, okay? All right, so if you understand what I'm trying to say about this thing, okay, the potential top, okay, all right, just type star in the comments, just type star in the comments. All right, so right now, are you guys enjoying the information so far, the content that I'm giving you, okay? And if you enjoy, just give me a like, share, or comment, okay? It will really help me a lot, and share this content out to your friends or relatives, okay? Let them know that this Alex is sharing good stuff, okay, to fellow traders. I really want to help, you know, the community, okay? All right. Of course, I have an agenda, okay? If more people, you know, watch MarketWise Asia, you know, there'll be more people coming to our summit. When there are more people coming to our summit, okay? There'll be more willing sponsors to sponsor our summit, and then I will make more money. Simple as that. I have an agenda, okay? Don't say I don't have an agenda. I have an agenda. Just that, you know, this is my agenda so far, okay? All right, so let people know about this content over here. So give me a like, share, or comment. Liking is free, doesn't cost you money also. So by the way, you need to know that, okay, the things I posted on Twitter, you cannot edit one. Once you posted, okay, you cannot change the timestamp, edit, okay, you cannot edit at all. Okay, so as for now, for Elon Musk is not changing that, okay, for free account. You cannot edit, okay, it is all stated unless I delete the account, okay. So all these are posted beforehand, okay. At least I hope that you don't think that this is yeah, Alex 大炮先 one, you know, hindsight talking, all this, okay. I posted this way before the market actually corrected, you know, today or yesterday, that kind of thing, okay. So this is real time, not exactly real time, okay, but before the event actually happened, okay, before the event actually happened. So okay. So let's go through some of the things over here. So okay, how about let's go through some of the stocks over here, okay? Just that's the reason why I hope you guys can follow my Twitter. So everything is okay. You like, okay, just type like, okay, only so little like. Give some like, okay. So let's go through some of the things over here. What can I share over here? Okay, talk about individual stocks. All right. So on the, you see, I say I've been bullish, right? Okay, at the start or the of late December or early January, mid January. Andy, right? Tesla. I shared that on Twitter, right? So on the 2nd of February, okay, this is more of a case study. Later I'll show you some trade ideas. It's more on commodities, okay, not on the stocks. Right now, I think I have nothing to trade on stocks. I already exited my position, okay, because I feel very light now on stocks. So I don't care what the stocks do now, okay, So IVZ is actually this Invesco. Invesco is, some of these ETF provider is by Invesco, right? So I actually posted this, okay, on February 2nd over here. February 2nd is this one, okay, Invesco. Seasonals 6 to 17 Feb, positive 10 times for the past 12 years. Will this time be different? So I talked about that on February 2nd. I went in, okay, and yesterday, Invesco, wow, I don't know what happened. Okay, just chunk. Okay, Invesco yesterday, IVZ Invesco yesterday. Invesco yesterday is up 7%, up about 7% over here. Okay, if you ask me, hey, Alex, how do I know that it will chunk up? I don't know. I seriously don't know. I'm expecting, price could go up, staircase, something like that, okay, but it just burst up like that. Then I exited my long over there. And yesterday, based on the market internals, I see the market is not doing very well. I exited with a 1.2R reward, okay? Which means that I risk $100, I get back $120, okay? Usually, okay, I will exit with 1.5R profit, okay? Okay, that is my goal, okay? It doesn't mean that I will take 1.5R all the time. I just take whatever the market can give me. Can I understand or not? And sometimes, okay, some people say that, your risk reward must be 1:2. Okay, 1:3. That it is worthwhile to take 1:3. But it is actually quite difficult, okay, swing trade to get 1:2, 1:3, unless your stock is very tight. Okay, you get what I'm trying to say or not? If you 1:2, you might have to endure some pullback before it can eventually go to your target. Okay, after some personal experience, I think that 1.5R is a sweet spot. It's a sweet spot. Okay, I think I can get it. If I can't get it, 1R, 1.2R, it is fine as well. Okay, so 1:2, 1:3, very difficult lah. So I don't do that. 1.5R, okay, and I don't try to ride on the trend. Okay, well, I'll get 2R, 3R, 4R, 5R, that kind of thing. I 1.5R, I go for the next opportunity. Okay, I go for the next opportunity. Okay, so Invesco, all right, and then Invesco is one over here, and silver. Okay, silver, it is something that I thought. Okay, all right, over here. Okay, this is January 26. I posted on January 26. Let me try to scroll down to January 26. January 26. Wow, quite some time. Over here. Is it? Yeah, silver supported at the yearly and monthly CPR price above the Ichimoku cloud and with uptrend intact. Okay, seasonals between January to February is favorable too. So I thought that, this is like cup and handle, okay, up cup and handle, then range bound over here, and then it might go up. Okay, but okay, the price action actually is not so good yesterday. Okay, all right, so yesterday, silver gap up, go higher gap up, but I don't like the price action. Price actually came down with a long shadow, so I exited with a 0.5R profit. So see, I take what the market can give me. So this is a discretionary exit. Okay, all right. So time will tell whether it is a good decision or a regret. So looking back, okay, let me see. Silver. Wow, silver. This is on hindsight. Okay, this is a good decision. So I exited yesterday, lah. Okay, all right. After that, get some profit. Okay, all right. Can give me a clap or not? Okay, just type letter C, can or not? All right, type letter C, can or not? So not too bad, huh? Okay, my decision is discretionary decision is not too bad. Huh? So this is something that didn't work out too well, but I managed to get out in time. All right. Okay. And then what else? What else? So Euro GPP. Okay. This was posted on the January 24th. January 24th over here. January 24th. Okay. Euro pound. All right. So February 2nd, price eventually move up in my favor. Okay. So go back to this is Euro pound over here. Wow, you see, at this point in time, I will feel quite dewy that I never hold on to the trade. But nevertheless, okay, I get the full 1.5R reward. Okay, somewhere around here, I exited already. Okay, all right, so enter somewhere around here. This is a wash and rinse pattern. Okay, exited over here, so 1.5R profit. Okay, so price continue to go higher. Okay, so this is, I posted that on the 24th of January. Okay, and then let's see what else. Okay, oil also posted on the 31st. I didn't post real time, but eventually oil did come down also. Something that I'm quite proud of is, let me see some of the trade. KNSA, Kini Katsa, okay, pharmaceutical, yeah, okay. So I also mentioned that I exited with 0.5R. This one is not the so good one, okay. What else? Tesla, I mentioned that previously before. You can go through some of my, this one, what else? Actually, a lot, okay, a lot. So maybe you want to go to, I think cannot scroll down already. Okay, so go and follow my Twitter. Right. So posted the link in the comments. So BL, your say what is 1:5R, which means that 1:5R. So let's say for example, 1R, okay, you risk $100, okay, all right. 5R means you get back $500, okay. So let's say your risk to roll is 1:5, which means that you risk 1R to get back, as in you risk $100 to get back $500. You get what I'm trying to say? Can So risk to reward 1:5, you risk $100, you get back 500. You risk $100, you get back $500. Okay, can. So looking at that, I think right now the market, it is still pretty strong, I actually wanted the market to come down. So I don't know the market can come down or not. So I'm light on the stock, so I'll prefer it to come down. Okay, so I don't know, but if it does come down, key thing is central pivot range. Look for the central pivot range. Okay, all right. So stocks, no trade ideas. Okay, good question. Hi Alex, you'll be looking to open any short position. So I actually personally, I don't dare to open short position. Okay, I don't dare right now because I find that this could be the start of a new uptrend. Okay, when the start of a new uptrend, okay, price can be stronger than you think. Okay, and it can run a lot higher than you think it is possible. Okay, so this one, okay, the pullback might just come down 1 or 2 days, or don't even come down and continue to hit higher. Okay, and then I'll be in trouble. I mean, I can hedge or whatever you call it, but I don't like it. But my star signal is telling me that, hey, personally, it's a bit overstretched. Okay, you might want to reduce your long position or lighten your load. But I won't try to short it. But if you want to try and short it, it is okay. There's nothing wrong if there's a trigger for you to go short. But personally, I think I will just rest for the time being and just stay out for the time being. Okay, and wait for the opportunity to go long again. Because as I mentioned, this month, January, has been a very fantastic month for me. So, rather than try to add in more trade, try to do more things, okay, and go short and be itchy fingers, I just stay out for the time being. I hope that this answer satisfy you, okay? All right, so right now, in terms of things, okay, you try this, you can look for commodities. Later, I'll go through the January year-to-date performance. Okay, later. Okay, let me give you another 15 more minutes to be done. Okay, so try ideas. Okay, you can take a look at palladium. So palladium, 1st of February to the 17th of February. Right, for the past 12 years. Okay, 92% of the time it is positive, which means that out of these 12 years, 11 years it is positive in this period, start to the mid of February. Okay, palladium. Later we go through price section. All right, copper. Copper also similar copper. So it's February to 17 of Feb. For the past 10 years, okay, 80% of the time it is positive, which means that out of these past 10 years, 8 years it is positive. All right. And then there's this soybean over here. All right. And then Feb to the end of the Feb, 28th of February. Okay. For the past 11 years, okay, 82% of the time it is positive. Okay. Which means that out of these past 11 years, 10 times it is positive. So palladium, copper, and soybean. By the way, right, nowadays some of the ETF commodities ETF, I think it is best that you don't trade them, okay? Because some of them, like soybean one ETF, SOYB, it falls under the PTP list. I'm not sure whether you know or not. There's this PTP list over here. All right, if you Google PTP list, okay, I also forget what it meant, PTP. Okay, I didn't know partnership, don't know what things securities are. Basically, if you use this as your entry, right, after you sell, okay, exit, right, there's a 10% withholding fee, okay, on your value of the security, which means that if you enter with a $5,000, okay, worth of ETF or the securities, okay, 10%, okay, 500, they take 500, no, 500 is gone. It is not your profit, okay, it's 10% of the value of your security. Okay, so don't anyhow trade. So for example, yeah, gross sales will be withhold. So it's a gross sales. So it's the value of your security. So for example, like soybean, SOYB, it is here. Okay, so you need to be careful. Don't trade the soybean. And of course, I think some broker has already limit what you can trade. I think right now, if you want to trade on soybean, also you can't trade that. And the very common one, like USO, okay, this is the US oil ETF. Thanks, Chrissy Pan. Okay, this is the publicly traded partnership. Okay, all right, USO, the oil one also under a PTP list. So I'm not sure, but nowadays I don't really trade this ETF because I just skip it. Okay, like dollar index, UUP also cannot trade. Wheat also cannot trade. Copper also cannot trade. Okay, copper cannot trade. Copper index. A lot of these things. Sugar also cannot trade. Some of the commodities also have. IBKR, I'm not too sure also, but I try not to trade them. So for me, the best proxy, okay, I don't really trade the futures directly. So the best proxy is you can use CFD. You can use CFD to trade. CFD, you can use IG or you can use CMC market or whatever CFD broker that you have. Okay, these are the better as a proxy to trade the commodities over here. Okay, just to let you know in case you don't know about this PTP list over here. Okay, so let's go through this palladium. Palladium today is not so good. In fact, all the metals are down. palladium 2.39%. Okay, so it's still down. Okay, still down, right? So you might want to wait for at least price to go above, okay, the central pivot range. Then you might want to take action if you want to lah. For now, I do have position in this commodities. Copper, copper, it is yes, okay, so it's coming down also, copper, but it's hitting the central pivot range. Okay, so let's see whether it can hold or not for copper. Okay, and then the one is soy, it is soybean. Okay, it is the stronger one over here. Okay, so let's see whether it can go higher. So these are just trade ideas. Doesn't mean that you must enter. Okay, I could be wrong. Seasonals doesn't mean that you sure 保价, sure win one. It just tells you that historical data, you still need to wait for the price action to go in. Okay, all right. And by the way, a lot of these things that I mentioned in the Twitter right just now. Okay, reset. Okay, I mentioned in the Twitter just now. Most of the trigger is actually using wash and rinse trigger, wash and rinse. So I believe if you have been watching the Market Insights Virtual Summit, okay, Bini Ong has been talking about the wash and rinse setup and such. Okay, so this is the wash and rinse, the alien wash cost, 100% refundable. Okay, so this is the link over here. All right, I'll post the link once again. So if you know what is wash and rinse, okay, I strongly encourage that you join her course. It is refundable. Oops. Let's post this link over here. Okay, so this is the wash and rinse. So there's a lot of other things inside the course, the webinar, okay, trade manager, MT4, this is a robot and such. Okay, there's a lot of things, but the key idea, it is wash and rinse. Okay, how do you trigger into entry? So you know what to buy, how to buy. Okay, so when do you enter? So nowadays, most of the time, I'm using wash and rinse. So okay, now the previous webinar is gone, but you can look through that. So essentially, it is 100% refunded. So it's through these two brokers over here, refunded $700. So the cost fee is $700, refund $700 back into your brokerage account, and it is a very easy method to get. Okay, all right. So these two are reputable Australian brokers. Okay, so yeah, I think if you trust me, okay, then I think you should go and sign up for the wash and rinse course. Okay, I think this is one of the cornerstone on how I enter into the market. So once again, I will just post the link in the comments over here. So Share Yo is asking, go. The matter has been a little bit overextended recently. Okay, so all has been coming down. Go. Okay, all the metals have been coming down. Commodities is mainly coming down. So overextended. All right, so yeah, so it is overall still on an uptrend. So you add in the gold. Okay, you can see whether it is approaching the S1 level support and see whether the price can hold. And normally my entry, as I mentioned, I have to wait for a wash and rinse setup to enter. Okay, setup to enter. All right, so if you know what wash and rinse, all right, go to the this top, the alien wash course over here. All right, so if you look at the 2-day time frame, okay, all right, expected. Okay, this is overextended. Okay, a pullback is actually good, but I think we are somewhere near the support already. Okay, at about 1870. So we shall see that. Okay, about that 170. Okay. James is asking Hong Kong view. Okay, I think I still have some time. I can entertain a few questions. So put it down in the comments. So I'll take a look. Okay, I can't promise I can answer everything because it's already 1 hour and about 15 minutes already. Okay, Hong Kong market is uptrend, but I think pullback is necessary also. Okay, Hong Kong market. Okay, so naked chart. Okay, I don't need the naked chart. Okay, just put here. I remove the drawings over here. Oops. Move the drawing, this one. So Stephen, okay, you say 1866 is this is the gold spot price. I'm looking at the gold futures price. Some slightly difference. Okay, so if you look at the spot price, okay, then the spot price is at about 1850. Okay, 1850. But nevertheless, if you have your pivot point indicator there, look for the support at the S1 level, whether you are looking at the futures or also at the spot price. Okay. Hang Seng Index. Okay, can you see over here? It has been downtrending all the way. All right. In fact, November, first month above the central pivot range. Okay. Second month, central pivot range. Third month above central pivot range. And this is the fourth month, it is at the central pivot range. So quite clear cut, it is, in an uptrend right now. But uptrend, okay, uptrend price doesn't move in a straight line. So there'll be, up impulse, then correction. So right now it is the corrective mode right now. So wait for the correction to end. Again, I cannot tell you when to enter. So I can tell you that it is uptrend. The entry wise, go for the wash and rinse pattern, wash and rinse setup, or whatever entry trigger you are looking at. Okay, but the key thing is Hang Seng, it is in an uptrend right now. Okay, in uptrend right now. Okay, can you see that it is holding at the central pivot range? Can you see or not? It's holding at the central pivot range. Okay. Avuka. So Chinese stock Baba, it is almost the same. Okay, the trend is on an uptrend. Okay, look for support at the central pivot range. Okay, or whatever your trigger entry is. Okay, I cannot decide for you. So wash and rinse setup is my favorite go-to setup to enter into a market. Okay, all right, it is in an uptrend. So I will go through the Chinese and the Hong Kong, so it's about the same. Okay, for the index. Okay. Oil. Jen is asking for oil. Oil, you see, oil. I also mentioned in my Twitter, right? Oil. So oil. What is it? Oil. Okay, oil. Resisted by the flat Ichimoku cloud. This is the weekly time frame over here. So oil, it is overall still in a downtrend. So I'm looking at the crude oil futures CL. Okay, so I mentioned over here. Can you see that generally it is below the cloud? Okay, all right. So below the CPR right now. Can you see over here? Price try to break through and then price below the CPR. So it is bearish. Okay, if you really want, don't long crude oil. Okay, if you want to short, you can, but up to you. But you have to wait for a trigger. As I mentioned, okay, if you look at the weekly time frame, can you see or not? This is like the flat Ichimoku cloud. It is acting as a very, very strong resistance level here. Just ping pong over here, just cannot break through the thing. So all in all, it kind of seems, like a flat pattern. So potentially it can come down, but I don't know. Okay, so we shall see how it goes. If you look at the 2-day time frame, okay, this is even more clear cut. 2-day time frame. So instead of the daily time frame, weekly time frame, 2-day, right? Even more clear cut, give you a different perspective. Oil is definitely in a downtrend. Okay, once price broke above the cloud, okay, it has always been below the cloud, so it's a downtrend. Okay. So you don't think this China market is overextended anymore? Overextended as in, uptrend. Okay. Hang Seng Index has been down for a lot, like Hang Seng Index. Okay. All right. Hang Seng Index is down a lot. The Hang Seng Index. Okay. From the top to the bottom, it is down about 55-60%. Okay. So right now, individual stock wise, okay, I think it can still go higher. Personally, I think it can still go higher. I don't think it is still overextended. I think a lot of people are still don't dare to go into the Hong Kong or Chinese market. So yeah, until you can hear the sentiment is very bullish about Hong Kong, then I think they'll be more afraid. But right now, only like active in the market, people talk about Hang Seng Index, Hong Kong market, and such. So I don't think it is overextended. But short term wise, Short-term one, it is overextended. Okay, short-term one, it is overextended. So you need a pullback. You need a pullback. Okay, you need a pullback. Again, I don't know when the pullback will be in. You need to have your own trigger. Wash and rinse, whatever pattern it is, you need to have your own trigger. Okay, so if you trust me, okay, all right, go and register for this wash and rinse course over here. All right, so I post the link in the comments. Cat J is asking, can look at Crocs. It is not in my watch list. Crocs. Crocs. Yes. How can I help you? Crocs also not too bad. It's retail. Okay, online retail is not too bad. Not too bad recently. It is not too bad recently. Okay, so yeah. All right. So again, if you look at the weekly time frame, all right, it is also overly, stretched. Okay, overly stretched. So a pullback might be in place. Okay, so this is the daily time frame of Crocs. Okay, so at least I think wait for the price to test the CPR. So can you see that previously when price has broken above the cloud, okay, above the cloud, can you see that it tested the CPR many times? CPR rebounded, range bound, then after that CPR rebounded, CPR rebounded, CPR rebounded. So let's see whether it can test the CPR again. And if you look at the weekly time frame, okay, a good price should be where this is at the flat cloud area. So this could be a very strong support area. Go for it to come down, okay, and then see whether price can go higher or not. So this level, it is at about 115, okay, 115. So 115, if you go back to the daily time frame, 115, it is just below the CPR somewhere around here, okay, 115 area, okay. All right. So Hong is asking, should take profit now? This one very hard to say that. I don't know your time frame. I don't know you are doing swing trade, are you doing position trade, or is it long-term holding? So I cannot decide for you. Okay. Swing trade wise, up to you lah. Okay. I really cannot decide for you lah. So up to you. 1 times 1.5R, 2R, 3R, 4R. You think is good enough? 见好就收啦 for swing trade. Okay. Do you think QQQ and SPY looks like they are at the verge of wash and rinse at the key level? Would next week possibly show the rinse trigger? QQQ, is there a wash and rinse trigger? You attend a wash and rinse class before by Bini? Okay, so there is no wash and rinse trigger for QQQ. No wash and rinse trigger for QQQ. For SPY, also no wash and rinse. There's no wash and rinse. Okay. All right. Darius is asking, what do you think is the chance of US market coming down at this level, like what you want, versus going straight up because it's already uptrend? Okay, the very straightforward answer is I don't know. Okay, because as I mentioned already, when people are extended, then they want to chase, which is not my style. Okay. For the US market, as I mentioned already, okay, where is it? Okay, for the US market, I really do know that this sort of question coming down at this level, I really don't know. So I have to wait for price action. So as I mentioned already, for S&P, when price is somewhere around here, price is somewhere here, I already entered quite a few positions. So I just ride all the way up for this individual stock. So right now, I'm completely out of the US equities right now. So wait for the signal to come again. So I personally have a screener. To tell me, is there a signal coming in or not? So depends on how many signal are there in the market. Is there a lot? Is there a lot means that the market seems to be rebounding soon, or is there very little? It means that the market might not be a good time to rebound so soon. Okay, so right now, for my type of entry, there is not much signal because market is overextended already. Okay, all right. So I like to wait for a pullback. Okay, wait for a pullback and then enter. So right now, market can do something like this. Okay, really, there's no much pullback. Can just go short up like that. Can also. Okay, so there are a few ways. The best way is that price come down. Okay, and then go high up. There is correction through price, or it can do a correction through time. Okay, which means that price we just ping pong, range bound for a while. Okay, correction through time. Okay, which means that the buying is still there, but it didn't really come down, but I bet you go up. This is correction through time, correction through price, which is coming down, or okay, the market just bulldoze all the way up and make you FOMO some more, which I don't really want to chase also. Okay, this is my view. Okay. All right. Okay, so Christina said Amazon. Okay, Amazon has dropped a lot. Now can go long. Okay, if you're asking me, Amazon on the daily time frame, it is not too bad, because okay, first month above CPR, second month above CPR, now it's also above the cloud. Okay, so right now today, because of the earnings yesterday, okay, price actually gap down, but today is a positive as in price, because the opening price is high. The closing price is higher than opening price. Okay, so it's pretty strong also, even though it is down 4.6%. Okay, so again, I have no way to tell you when to enter, so you have to wait for your own trigger. Okay, all right. Wash and rinse trigger, whatever it is. Okay, if you trust me, okay, go and attend the wash and rinse trigger. So once again, I post the link in the comments. So let's say for example, what to buy, how to buy. Okay, how to buy is a pullback. How to buy? Okay, what to buy? Amazon stock. When to buy? When to buy this freaking stock? When to trigger? Okay, then you need a entry trigger. Again, I need to repeat. Wash and rinse is my go-to trigger to go nowadays. So up to you to decide. Okay. Okay. All right. Oh, I thought so long already. 1 hour and 25 minutes already. So I think I shall call it a day. So let's take a look at the market right now. Okay, market. Okay, as I mentioned, potential. Potential. Okay, potential. Where is it? All gone. Potential star signal over here. Okay, potential star signal. So VV ratio also potential star signal. So the market overly stretched. So I would prefer a correction. Okay, and don't go long if you are trying to go for swing trade, holding for a few days to a few weeks that kind. Okay, I think it's overextended. Right, I think wait for it will be a better idea. Okay, so that's my personal opinion. But overall, the market, okay, it is in an uptrend. I feel that it is in uptrend. The market breadth internal, okay, it is showing good internal. Okay, all right, and S&P 500, okay, this month is the second time it's above the central pivot range. Okay, let's see whether it can close above the CPR this month. All the other indices, okay, it is above the yearly pivot. Okay, like the mid cap, small cap, and such. So they are in an uptrend. Okay, all right. So this is my personal view. So all in all, the recession can come, but that could be many months ahead, as in many months later. So in the meantime, there is still a lot of opportunities to do some swing trade or position trade. Okay, so that's my view. Okay, all right. So I hope you guys enjoy my sharing session today. So if you think that this session it is okay, it's good. Okay, just type value in the comments. Just type value in the comments. Okay, just type value. If you enjoy the session tonight, okay, just type value. Give me some support if you like this. Okay, share with your friends. Like, share, and comment. Share with your friends that Alex is giving good content on the Facebook Live and also on the YouTube channel. Okay, so I'm asking, right, what is the difference between camera pivot and traditional pivot? Good question. So camera pivot, I use it as a minor support and resistance level. So it is good, okay, if you want to take profit, okay, and you say, hey, maybe price, you reach a 1.55 profit at the camera pivot, okay, then it is a good time to exit. Okay, then this is a minor, a good level for you to exit your position. Okay, all right, so it's a minor versus the major support. All right. Okay, so I hope you guys enjoy the sharing tonight. So I really hope that share with your friends, let your friends know, especially if you know some friends who are new to trading, they are struggling to trade, want to get some clarity from the market. Ask them to join MarketWise Asia, join my Facebook Live, join my Telegram channel, follow my YouTube YouTube things as well. So let me post the link in the comments once again. So these are my social media channel. Okay, I'll post the link in the comments. So with that, okay, I think that's all for today. 1 hour, 30 minutes over extended again. Okay, so thank you so much. Have a good weekend. Have a good Saturday and Sunday. Yeah. Have a good rest, and I'll see you guys again next week. Bye-bye.